Hi everyone, I'm Aimee Intro. I'm a partner here at Sassetti in our audit practice, and today we're going to talk a little bit more about inKind and why you should be caring about it now, particularly with the new standard that just came out.
What exactly is inKind?
So inKind has two pieces. You have inKind goods, and inKind goods is much easier to explain by saying what it's not. It's not cash and it's not financial instruments. Everything else that you're getting from a client is an inKind good. So if you're getting a car, if you're getting jewelry, if you are getting gift cards, if you're getting food, clothes, all that stuff counts as inKind goods or donated goods. The other piece of inKind is donated services. So a donated service can be something that's improving one of your assets. So usually this is like a skilled service. So you're talking about masonry, carpentry, electricians, anything like that that's improving the building. The other piece of it are donated services that either require a special skill or both require a special skill and would have otherwise been paid for. So these are things like accounting services, legal services, a nurse, a teacher, social worker, any of those types of things where you need those for your programs or your management and general operations, and you would have had to purchase them anyway, but someone is now donating all those services to you. So those are really the two main pieces. You either have a donated good or you have a donated service.
What are the more common ways organizations receive inKind goods and services?
Sure, so a lot of organizations receive inKind goods through their auction process. Like if they're getting, they have a gala and they request people to donate sporting tickets or jewelry or that type of thing. Those are a lot of common inKind goods that we see at our organizations receiving. The other more common on the service side are usually legal services, because they'll have board members that have connections that are able to provide those services, or we'll see accounting services even.
What about volunteer services? Do those apply to inKind contributions?
That is a good question. So unfortunately, it depends, I guess I'll say. That's our the go-to audit, our answer is that it depends. So it will count if it's that specialized service. But if it's just someone, say a lot of our organizations that provide like Meals on Wheels have a lot of volunteers that do deliveries. Unfortunately, just having your driver's license isn't enough of a specialized service, so that wouldn't count. And if you were, high school kids volunteering to do tutoring and things like that, those would not count. So you really have to meet that threshold of needing some sort of additional qualification in order for it to count as a specialized service.
What are some recommendations you have for nonprofits that receive inKind goods and services?
So our biggest recommendation, particularly in light of this new standard, is coming up with a gift acceptance policy, or because all auditors love acronyms, a GAP, which really will just explain or help define what types of goods that your organization wants to receive and what kinds of goods it doesn't. And I know it's always can be an awkward conversation with a donor because you never want to be like, no, I don't want whatever you're trying to give to me. But at the same time, some of the things just might not fit with how you are operating your nonprofit. So I'll give a couple examples. Like you probably don't want a car or a boat without a title because it's going to just be a huge challenge trying to sell that. You probably don't want a building or something along those lines that has a mortgage on it, because either you're going to have to sell it right away, otherwise you're going to be having to pay, this additional mortgage expense. You probably don't want a timeshare because timeshares are notoriously challenging to try to sell. So there are a lot of things that your board probably doesn't want because it's just going to make your life life harder, and it may not have the same cost-benefit ratio that you would want. The other thing you have to think about when you're thinking about your gift acceptance policy is what do you have to do as an organization when you do collect something you want. You have a donor that gives you, this really expensive piece of art or a piece of jewelry or something like that. There are more steps that the IRS requires when you do receive things like that. Necessary forms that the donor needs to fill out, and then if you turn around and sell it, there are forms that the organization needs to fill out, and it's really important that everyone in the organization is on the same page about what happens once you do receive these gifts. So a lot of times, especially if it's a piece of jewelry and say you're a homeless shelter or something, obviously, you're probably not going to use that piece of jewelry unless you're going to auction it off, but you're going to want to sell it. So, is your gift acceptance policy say, we're going to try to sell it within X number of days or something like that? You just want to be thinking through these things. So when you do get these gifts, you feel comfortable accepting them and knowing what you're going to do with them after that.
Who should be involved in creating a gift acceptance policy?
So the best people to think about having involved in this conversation are definitely the board of directors, your executive director, and then your development team. Because really the development team is going to be the people that are talking to the donors. And then of course, because I can never leave our finance team out, you want the finance team involved because they're the ones that are ultimately going to be getting whatever it is that you're thinking about getting on the books.
So now that you've created a policy that reflects what you want to accept, how do you then decide how you want to value those things?
Yeah, and I think it makes sense to think about those things at the same time, because when you are accepting something as part of your gift acceptance policy, how you're going to value it really brings in, how all the things kind of fit together. So a lot of the times you're looking at like a fair market value gift. So, if someone's going to give you a car, and let's assume it has a title, you might go to the Kelley Blue Book or something along those lines. If someone is giving you another auction item or something like that, maybe you would look it up on Amazon or something like that in order to come up with what the value is if you had to go and purchase it. I will say if you are getting something like that piece of jewelry that's over $5,000, then you're going to be talking about needing an appraisal. And I would say a lot of the times for buildings or anything like that, the donor who's giving it to you needs an appraisal in order for them to take the deduction on their tax return. So that number doesn't necessarily have to be the same, but I think it's a good starting point with how you're going to book it once you receive it and how it's going to end up on your books.
What about services?
Yeah, services, that's a great question as well. So services can be complicated because you don't always know, what that person's time is truly worth. So you're going to base it on what you would have otherwise paid for that service. So if you have paid for it in the past, like you have a lawyer that has donated their time and you've previously paid them $200 an hour, maybe you would continue to book that at $200 an hour. Sometimes though, you will get a legal bill, or especially when you're working with a lot of the larger firms that bill out at maybe $900 an hour, which is probably not what most organizations can afford. You would have to take that down to what you actually would pay for it. So, if that's $200 an hour or $300 an hour, you're going to look at it like that. And the same for like nursing or teachers. Like what do those people make? And so sometimes you'll look at like the Robert Half salary to see what an hourly rate would be, and use that. You would ask them, what do you charge other clients that you're providing us for in kind? So there are a lot of different ways to think about how you're going to value it. Ultimately, there's no right or wrong answer. It's more that, what makes sense in the context of your organization, can you support it? I will say the other piece of particularly donated services is how are you tracking it? Is there some sign of volunteer sign in, sign out? How do you know how many hours have been provided? Because that's usually the driver is hours times rate. So you just need to have that process in place. And again, this can be part of your gift acceptance policy that like anyone who's donating is required to provide, how many hours they've dedicated to giving you free services for your organization.
Now that we've talked about inKind and how to value it, what really are the changes we're seeing with this new pronouncement that affect the financial statements?
Yeah, and this pronouncement, it's called ASU 2020-07, goes into effect for all fiscal years ending June 2022 and after. So that's all of the fiscal years that are probably in an audit right now. So the main crux of this standard is really on the presentation side. It's really not changing the accounting that you're doing. It's really just presenting it differently on the financial statements. So in the FASB's eyes, they really just wanted to be able to make things more comparable. And because inKind is such a nebulous concept to begin with, it's just, a relatively made up number. Obviously there's thought behind why you're putting it on there, but it's really ultimately a judgment call. just making it more comparable so that we can understand how organizations are determining what that number is. So as part of the standard, one of the main first pieces of it is that instead of burying it, I wouldn't say most organizations bury it, but you have to call it out specifically what the amount of goods in kind or services in kind that you're receiving right on your statement of activities and revenue. So where you might have had, it included in contributions or something along those lines, it now has its own separate line. There isn't necessarily a requirement to do it on the expense side. You can, and I definitely see a lot of organizations do, just because it makes it also more clear as to, what function it's falling into. Is it a program? Is it a fundraising? Is it management in general? And it's just easier to do when that's separated on its own line. The second piece of the disclosure or the new presentation standards is around disclosures. So previously, really, you just kind of said, we have donated goods and services of XYZ related to XYZ, and you really didn't have to be all that specific. So with the new standard, it's definitely more specific. You're going to need to talk about, what is it that you're getting? Is it goods? Is it services? Where is it being used? Is it being used in program management in general, your fundraising? Are there restrictions on it? So I would say, for example, if someone gave you a car and then you said they had to use it for just providing meals on wheels or something along those lines. So then this asset is restricted just for that. Obviously, you probably wouldn't be taking it out for a joyride or something along those lines anyway, but that has a restriction on it and that you would have to disclose that as well. And then lastly, you just have to talk about what we just talked about a little while ago. How did you value it? Is it based on estimated amount of that what you would have paid someone else for that particular services? If it's like food, is it based on some sort of wholesale price? If it's clothes, is it based on like a thrift store value? So there's just a more that goes into how you're coming up with that number that's now going into disclosures that was never there before.
Can you summarize some key takeaways for everyone?
Think about that gift acceptance policy. Talk to your board, talk to management, talk to your directors. When you're adopting this new standard, think about where the amounts are going on the statement of activities and then review it to make sure you're not missing any of the disclosures that are necessary.